Hey everyone! Today, we're going to dive into a really powerful price action strategy that could honestly change the way you look at a chart forever.
You know the feeling, right? It's one of the most frustrating things in trading. You spot a perfect level of support or resistance, you put on your trade, feeling confident, and then bam, price just blows right through it. So why does that keep happening?
Well, the answer, the real secret to spotting trades with a much higher chance of working out, it isn't buried in some complex indicator. It's actually hidden in plain sight. It's in the story that the candles themselves are telling you as they get close to those key levels.
So here's the game plan for today. We're going to start with a super common trap that traders fall into. Then we'll get into the core idea, the momentum loss principle. From there, I'll show you how to spot a good reversal, how to recognize a dangerous breakout, and we'll wrap it all up with a final confirmation signal you can use.
All right, let's kick things off with the absolute core of this whole strategy, the momentum loss principle. Seriously, once you get this, you'll start filtering out so many bad trades and really begin to focus on the high probability setups. So, what is momentum loss, really? Think about it like a car speeding towards a stop sign. It doesn't just slam into it at full speed, right? It slows down first. It puts on the brakes. In trading, we see this exact same thing on the chart. That slowing down is the candles getting smaller and smaller as they approach that key level. And this, right here, this is the golden rule. You have to burn this into your brain. We are actively looking for this slowdown. We want to see the energy, the steam, draining out of the move just as it hits that wall of support or resistance. Okay, so check this out because this shows you exactly what it looks like. The ideal sequence starts with a big, strong candle. That's your high momentum. Then the next one is smaller. Things are slowing down. The one after that, even smaller. Now momentum is really fading. And then finally, you get that rejection candle. That's the signal that the turn is very likely about to happen. Okay, theory's great, but let's see how this actually plays out on a real chart. This is where you learn to read those brake lights that tell you a reversal might be just around the corner. Just look at this. It's a textbook example down at a support level. You can see the pattern perfectly. You get that big red candle, then a smaller one, and then even smaller ones. And see how it ends? With these tiny little candles with long wicks at the bottom? They're literally rejecting lower prices right before that huge bounce upwards. So what's actually happening behind the scenes here? What's the psychology? It means the sellers, the ones who were pushing the price down so hard, are running out of gas. They're starting to cash out and take their profits as they get near that obvious support level. And it's that profit taking that causes the candles to shrink. They're losing steam.
And just to prove this isn't a one-trick pony, look at this. It works just as well in the other direction. Here, price is coming up to a resistance level. You see the big green candle, followed by a smaller one, and then those little rejection candles right at the top, just before the price tumbles. It's the exact same slowing down pattern.
Okay, so we've met the hero of our story, momentum loss. Now it's time to talk about the villain. These are the patterns that trap so many traders because they're the complete opposite of what we want to see. This is when price isn't hitting the brakes, it's stepping on the gas. And here's the single biggest thing you need to remember from this section. If you see candles getting bigger as they approach a key level, that is a huge red flag. That's a warning sign telling you a breakout is way more likely than a reversal. Okay, check out this chart. Price is coming up to resistance, but look closely at what the candles are doing. We get a small candle, and then it's followed by a large one. That's a gain of momentum, not a loss. And what happens next? Of course, price just slices right through that resistance. No chance of a reversal here. Oh man, this one right here, this is the classic trap that catches so many new traders. You see a small candle coming into resistance, maybe you're thinking about shorting it, and then this massive engulfing candle prints. That's not weakness, folks. That is a show of absolute force. It's telling you the buyers are in complete control, and anyone who tried to short that got trapped as price exploded higher. So let's just boil this all down to its simplest form. It really is night and day. A good reversal signal? The candles get smaller. Price is slowing down. A dangerous breakout signal? The complete opposite. The candles get bigger, price is speeding up. It's a sign that one side is totally in control. Okay, so you've got the main tools now. You know how to spot momentum loss and, just as importantly, how to spot momentum gains so you can stay away. Now let's add one final, super simple pro tip to your toolkit that can act as a fantastic confirmation. And believe me, it couldn't be simpler. It's one final check. After you see the momentum die down at that key level, just look for the first candle to change color against the trend. This can be the final little nudge you need. And look how powerful this can be. You've got this strong uptrend, right? 1, 2, 3, a whole bunch of green candles in a row. But right when it hits that key resistance level, what happens? Boom. You get the very first red bearish candle, and that was the signal that the reversal was starting. So let's put it all together. Here's your new trading checklist, simple and clear. Step 1, find your key levels. Step 2, watch for that momentum loss, the candles getting smaller. Step 3, and this is crucial, avoid setups where the candles are getting bigger. And step 4, look for that candle color change as your final confirmation to pull the trigger. So think about this. What we have talked about today, it isn't just another pattern to memorize. It's a whole new lens to view price action through. The next time you open up your charts, you won't just see random candles. You'll see the story. You'll see acceleration and deceleration. You'll see momentum. And honestly, that changes everything.